Today is May 19th, Friday, 2023. Thanks everybody for stopping by. We're continuing on with the LasagnaCat's journey, finding his setup, finding his strategy, and finding a consistent way of trading. So LasagnaCat this week has been going through his setups. We've been doing one-on-one here and there wherever I have time, just to kind of help him and assist him on how the moving average setup works. And he's got some great details to share. So it's all yours.
Ooh, all right. Thank you, Semper. And hello, everybody. So yeah, Semper just said it all right there. So you guys all know what's happening here. And this has been going really well over the past few weeks. A lot of support from the group. It's been awesome. A lot of great guidance from Semper, and it's going real well. So the first screenshot that you're looking at, that's not from this week. I like showing this one in the beginning because it gives you an idea of like the general setup that I'm looking for in my first setup. So the setup is uh, get a nice dump, big dump to the downside. Look for support. Look for higher lows. This asterisk right here is like the first nice higher low identified, and then another pullback here to another higher low. This is also a fib setup because it revolves around first red pullback. Down to the bottom. Now, technically on this one, there are other like red pullbacks, like this is a red pullback, this red pullback. In fact, you could have taken this as your first higher low, but whatever. Also, this isn't the main, like best possible example of it, but it shows it well. So higher low, another higher low. Sometimes I take it on the first higher low, but we'll get to that. And do a target, which is like a fib target, which would be like my 161 or my 200. I like this example because it hits both. I also like this example because it hits the 200. That's my 200 SMA up there. And that's that. Other catalysts I look for, RSI recovering overcooled, needs to recover it, for me. And then over here on the right-hand side, MACD right here. So MACD cross is good. I'm learning to look at the oscillations as well and all that good stuff. So that's setup number one, dump to long, higher lows. And so before I go on to this week, I'll just show you an example of my second setup, which is the moving average setup. This is, I think, a great example of it. So it's similar to the higher low setup, the fib one, but this is what I can do. When Semper introduced me to like how to look at this setup, he's like, for when the trade like pushes out of your fib zone real quick, you can like use a moving average setup potentially. So right here, it's a similar system of higher lows after a dump. A lot of times though in trades, it's like a price action will come back down from the fib that I drew, which is this first red pullback down to this low. But sometimes it'll come down to my ad zone. I won't quite see the price action I'm looking for. Pardon me. And it'll blast off past my fib ad zone. And I'll be like, damn it, that's another one I missed, blah, blah, blah. But then what can happen is after a push, it could hit a little bit of resistance and come find support at the 50 SMA. It tends to be the 50 SMA for a good entry, and then blast off to where? 161 fib. And look at that, 200 fib combined with the 666 SMA this time. So good stuff. Those are the two setups. This one also ideally involves a pullback to the 50 line of the RSI, the midline. I don't have MACD up, but it also requires good MACD. Also, nice volume helps. And when it comes to the moving average play, it's usually kind of like it enough of like has done enough price action where you can look at TTM as well. At the very bottom, after the dump, especially to new lows, it's like TTM is less, I think, informative because TTM is a squeeze indicator, not a reversal indicator. RSI and MACD is like more like what to look at for the reversal. But that's just kind of what I'm piecing together. I don't definitely don't know all the answers on that. So Semper wanted me to focus on moving averages this week. So when he told me that, I was immediately thinking to myself, okay, just keep look out for the moving average setup. But he did do a pretty detailed moving average lesson during last week's Friday meeting. And it took a little bit of kind of sour trading in the beginning of Monday, and some messaging with Semper for me to like actually put some of those lessons into action. We had some one-on-one where he really quickly showed me what was up with my trading, because I took two reds to start off Monday, which was frustrating, of course, but as with all things, there is a solution. So here's his first trade here. I'll walk you through it, but this is, you see right here to the left, this is the big dump preceding what I thought would be the setup. The funny thing is that in the first part of the morning, while this was dumping, I was thinking to myself, um, all right, I know what my setup kind of looks like, but how do I know that the day has played out enough to where the setup will work? You know, because it's not just about has it found support. It's like it can find support and smash through support. It can find support and chop around for a while and smash through support. Like, how do you know? How do you know where the day is? So I actually had that question circling around in my mind. But you know, I pushed it aside and I was like, all right, let's look for the setup. So this was a red trade. So we had the big dump, it was there, preceding, and I saw RSI overcool. So I was like, all right, that's nice. Let's see if it can actually recover it. It kind of dipped into it and then came up. MACD down here was forming a fairly convincing little bottleneck for a cross. You know, I like that. All right, so moving back up here, my fib, right? So I got a nice first red pullback. So I drew the fib from there down to there. This one didn't really come close to any major moving averages. You know, I didn't even come close to 21, let alone the 50 or whatever. It got the 8 SMA, which sometimes is all right. Also keeping in mind that right here, the dash line, that's the 9 9 EMA daily. Potentially big resistance. I always got to keep an eye out for that. So it's funny to me. So let me just walk you through the setup. So fib, all right, here's my ad zone right here between these two lines, the 61, 50. So it made a nice first higher low there. I was like, all right, cool. And because it looked good, it went from the 0 up to the 23 and push up. And then it looked like it caught support at the 38, you know? And so when I saw it there, I entered long. It looks like a great short setup now you look at it, but it like immediately flushed out, and I was like, ah, damn it. Hey, what's up, Easy Win? Easy just joined us. How you doing? And so so I got smoked. I got smoked on this one. I didn't get smoked in terms of P&L because I obeyed my stop out rule and stopped out underneath the 23, like, you know, a candle close under 23. One of the other things that let me know that the trade was over was that I was looking up here and it looked like it had done 3 attempts to get through this level for a breakout and it didn't work. So, you know, Semper says it's going to be 3 or 4 attempts. And I figured on the 3rd attempt, since it came back this low, I was like, screw it, let's get the hell out. So that wasn't really that sour of a moment because like I kept my stop nice and small. But you know, it showed a lot of good catalysts. Also, this price action isn't that ideal, although I have seen the setup work with this kind of price action. But I think that the main problem here was that when in the day is it the best to find support so that doesn't smash through support, chop around and smash through support. So that question was still in my mind. So red trade number 1 for Monday. Let's go on to red trade number 2 for Monday. You're going to see some striking similarities. So check this out. They're like basically the same trade. Hey, come on. All right, trade number 1, dump, a little bit of chop, some higher lows. What you call it? Indicators down here looking all right. Cool. I remember that happening. I didn't like it. And now look at the second trade. It's really similar. Another dump down. You know, a little bit of basing here. First higher low, and what I thought would be the second higher low. Also looking at this, RSI in the lower channel crossed over nicely. In fact, it made a nice higher high, pulled back to the moving average, and you know, not quite a higher high, but I thought it might be building up to that. Can't see the top of MACD, but it's crossed over real good. So I was like, yeah, let me get in. You know, again, like it not the best price action actually for this because it's kind of tight, but I've seen it work before, so I thought I'd get in, but I didn't think I would what? Get smoked. Same getting smoked situation as last time. Absolutely the same. Such a similar outcome. Again, like first trade I took, second trade I took. All right, so moving right along, check out over here. Price action really starts basing, and it takes off for an awesome move. With sort of a similar RSI look as I was looking for, MACD coming for the cross. At this point, Semper sent me a message and he started pointing this stuff out to me, and it sounded like he was about to get in, and he did indeed. And I was like, no way am I getting in. I just got smoked twice. I got smoked up here. I got smoked down there. I was like, I'm just going to chill out. And he was like, he like immediately said, he's like, I already know you got in too early. And I was like, oh man, like, how, how is it so apparent? And so, all right, on these two trades, on these two screenshots, you can't see where the 200 SMA is or the 666 SMA because they're higher up. But let me pull down this other screenshot with price action, larger image of price action, and I'll show you where Semper was coming from. So this is where that quality basing was, that looked good to him for an entry, which he did indeed enter, and check out, obviously price action responded. So he said to me, I already know you got in too early, because I told him I got smoked twice, and here's where I got smoked. 1, 2, almost identical smoking. And what he told me was that you needed to wait for the 666 SMA, which is this yellow one, to be over the 200 SMA, which is this purple one, because that completes the entire moving average stack. 666, 200, 150. That is the stack in proper order. And that answered my question that I had in my mind pretty much from the beginning of the day. How do I know when the day is ready? How do I know when it gets to support, it's the right it's the right juncture of the day? And it was answered that it had to do with, here was where the 666 and 200 were during both of my trades. 200 was pointing down to make matters worse, especially on the first one and especially on the second one, pointing down. This guy 666 was planing nice and flat. We needed the cross, and with this guy maintaining flatness and this maintaining, what you call it, pointing downness, it was gonna happen. But I wasn't looking at that scope of moving averages. So that was my Monday. And when he explained that to me, it was very crystal clear. It's all contained in the moving average lesson he posted last week with last week's meeting. But it's hands-on learning really drives the point home. So all right, so this got me a wider scope of understanding of moving averages to look forward to the going forward for the rest of the week. All right, so let me move on to Tuesday, because that was my Monday. All right, Tuesday would be May 16th. I placed one trade on Tuesday, May 16th. It was indeed a green trade. And I utilized some of my new moving average. Wait, let me get rid of some of these other ones. Some of my new moving average knowledge. So nice little trade here. Good representation of my setup too. Dump here, dump here. And it found support. Here's my SPY chart. Yeah, just switch over to SPY really quick. This was my support right down here that I spotted. So standard dev center, an old algo level with the 23 hidden fib, which isn't the most, substantial fib, but it was a confluence. I paid attention to that because of the two matching up levels. This bold blue one, that is the 10 SMA daily. And up here is the 38.2. So for support, we saw, a little shy of the center, but whatever. I still took it as a thing. Nice push through this lower hidden fib. Nice smash through the 10 SMA daily. Gotta pay attention to those smash throughs. Let me just silence my phone here. My bad, my bad. All right. So push right through and a nice little tap back. And like, and so when it came to this, I'll show my MES chart in a second. When it came to this, that's when I drew my fib down to the bottom from this red pullback. And the next pullback caught this support at the 38.2 hidden fib. The 38.2 is good because it represents that pocket of fib support that Brandon and many others like to use. You know, I typically use the 50-60 as my ad zone. I believe Semper sometimes uses 50-60, sometimes he uses 38-60. Sorry, 38-50. It's all good. So here we are back in my MES chart. So yeah, I took that first red pullback, which had interaction with the 21 SMA. By the way, if anyone needs to comment while I'm in the middle of a sentence or a point, or if anyone needs to ask a question, want me to slow down, please, please, please just go right ahead, chime in, and whatever you need, we'll take care of. Yeah, so don't worry about interrupting. It's all good. So first significant pullback I got in. I usually like the second pullback, but considering the multi-level support on SPY, and the fact that my indicators look really good, nice little higher low for recovery on RSI down here, you'll see, and I noticed this at the time, I was like, what the, got a little bit of a double top underneath the 50 on RSI. That made me a little bit wary. But it was the one and only thing making me a little bit wary. Like, sure, MACD was starting to close in a little bit on itself, but sometimes it's just a close in, like a pullback, for example. You know, the beige line, it sometimes needs to pull back to it or near it. So I was like, this looks good. This really does fit criteria. Let's get in. Sure, I'm glad I did, because nice quick trip up here. Love it. Very reasonable pullback to my 100 fib that I drew. I call it my trade plan fib because, you know, we got all these longer standing time frame fibs that we all watch. But when you recognize price action creating that nice first red pullback off support, you draw your fib and it shows your entry, it shows your stop, it shows your targets. That's like your whole trade plan. Keeping in mind that sometimes a better target can be dictated by moving averages, whereas we're now beginning to learn by RSI, you know, depending on which one is appropriate to read at the time, which is something I'm still learning about. But needless to say, after that reasonable little pullback, it shot straight up to my target. If I was doing multiple contracts, I'd do the 161 fib, which was my first target. So I got out there, and I would do the 200, which was right up there, matching really nicely with general location of the 200 SMA. We love seeing that. And plenty of volume. So on my setup, I start looking at volume after the big dump. All this red volume, huge bars, intimidating. I find that it's good to kind of start measuring volume after that. It's just my little take on it, but this is a good example of when it really makes a lot of sense, because nothing beat this significant buyer volume right here. This one made a nice try. This one made a pretty respectable effort, but still nowhere near it, visibly larger. And this one obviously is huge, but that came after my entry, so I'm not even counting that. But nothing did nothing after this one. All right, cool. So that is that entire trade. RSI was great. I'll show you why. It came through real nice, the 50, and you know, came down here. You know, it didn't do a legitimate pullback to the 50, but it was a pullback indeed. And you know, I'm just, wait a second, am I even in the right spot? Shit, it's hard to tell. Yeah, I like the way it looked. It might have just been piercing through. I don't know. Something. But needless to say, it was at least already crossed over at that point, and MACD was encouraging. And I wish I had drawn a line down. Well, yeah, just out of curiosity. So it's this volume beat. All right, so this is where I got in, where it was attempting that push. And coming down here, this is about where MACD was. So it had already come down. It was maybe starting to point up a bit. Something like that. Anyway, I'm really happy with this one. I'm happy with it because I feel I use my indicators real well. I feel like I use SPY support really well. I feel like I ingested the new level of moving average knowledge, the stacking that Semper taught me about the previous day, learned about it, integrated it the previous day, and put it into practice the very next day. So, I mean, that's a lot to feel happy about. Does anybody have anything to say, questions, comments, pointers about either this trade or any of the ones from the prior day? If so, don't be shy.
That's a good trade because I remember you saying that you were gonna take a fib or a fib play unless it's a second pullback or the
Right.
second. So either way, the play played out and you had confidence in your other catalysts or the support levels that you have drawn out.
Yeah, absolutely. It was I had green lights all over the place. Green lights all over the place. The only one that I think was like I took a little bit of like hopeful thinking on was RSI because I really wanted I really wanted it to push through and do what it did, but I didn't know that it would.
Yeah.
But it was the third attempt, so I figured, and I had also counted, so I was like, it's the third attempt. Let's give it a fighting chance because everything else looks good. Um, and I really did like the stair stepping on SPY support. It went from support to support two to support three,
Yeah.
and
Well, even if you had missed that whole move where you missed
yeah,
that line right here, this line right here, I think black.
there we go, the red.
Let me change this color. Um, yeah, that's better. Yeah, that line is a
Yeah.
pocket of where buyers. So buyers are coming in right here,
Mm-hmm.
and usually it comes back and especially if there's accumulation of buyers stacking up and holding that level,
Yeah.
there's gonna be another move coming.
Yeah, it's funny because like when I'm in price action like this, if I see another higher low and I see evidence of accumulation there, I'm into it. But if I see something that comes like down to the same level, I'm often like, what if the move is over? It's risky now. I don't want to get back in. But that's
That's where the moving averages will help you.
mm-hmm,
Like
mm-hmm.
if the 50, because at this point right here, where's your 50? Is it this one right here?
It looks real good. It's this one right here, and here's
Yeah,
the EMA. So the 50 cross is bullish. Yeah, yeah.
right here, right?
That's the 50 EMA and this one right below
And
it.
this is your 100.
Let's see. They're kind of bunched together. No, the 100's up here. Yeah.
Yeah, yeah, yeah.
And the 50s are beneath that cross bullishly.
Uh, so you get the 50-50 cross bullshit and you see it pointing up towards the 100.
Yeah.
It's telling you that there's still probably another play because it already broke through that. Your 666 hasn't been tagged yet. After
Right.
it broke through,
Mm-hmm.
it shied it right here, shied it right here, and kind of shied it right there. And it looks like it's getting down, but usually it'll tag it on the third or fourth try up.
Right.
Just like with when it usually breaks through a level, it's usually 3 or 4 times before it breaks through. That's the same way with it tagging it. If it already had one move here, failed. Um, yeah. So expect for it to hit the 666 before it continues going down,
Mm-hmm.
or if it busts through the 266, then you may trend might change up.
Yeah.
But like like in your previous trade where the 200 was kind of like this, but on the it looked opposite, like it was closing in on it.
Yeah.
You have to see it the same way going up. So you would want to see the 200 closing in on the 666.
Yeah.
And that 200, you see it. If you see it closing in on the 666, then you got to start thinking, okay, it might change direction here. It might
Yeah.
start going for a long, reversing
Yeah.
for the day. And usually that happens like half the day because the first half of the day it's been going down like this, right?
Yeah.
And then the next half of the day it's gonna bring the 200 back up.
Right. And then when that cross happened, that's when the next significant long would be potentially.
Yeah, potentially.
Right. Something to look
Yeah,
for.
yeah, yeah. But like you said, you always want to see them stacked in
Yeah.
order 666, 200, especially when it's barely this far apart.
Hmm.
It's and you want to see them spread out, and then as soon as they all stack up, I mean, it could all stack up right here, and it could have popped up, right? If they're all stacked up in order, right here in this area.
Hmm.
So it could have reversed there, but
Right.
it was better over here
Yeah, for sure.
because it has your support right here. Right here, it's way far from this support,
Yeah.
and right here it tagged that support. What is
Yeah.
that? Your standard
Yeah.
dev?
Yeah, that's standard dev -1, which
Yeah.
we've learned a lot about in trading futures.
Yep. And usually Brandon always says at the -1 there's a big pop.
Hmm. Hmm.
Um, this could have possibly been a short entry, but the MACD's bullish and the RSI is bullish,
Yeah.
and you got a big volume B right here. But
Yeah.
that's after the fact. Yeah, good trade.
Thanks. Now, I also want to point out to everybody, you might have noticed a RSI crossover arrow. Um, and the trade did work. But don't be deceived. Like when I see these arrows, I always say to myself, is a move coming or am I trying to be tricked? Not that these are trying to trick you. I'm just saying that it's a very inconclusive indicator. It's a heads up. It's really a heads up because they seem to not work out as much as they do work out. I just use them to start thinking to myself, is this going to be legitimate as a move or a setup, or is this something that's going to fail? I'm just sort of like it just tells me that there's a couple of some possibilities in the air, and they don't even show up when something happens a lot of time. Just in case you noticed it, it's not something really to like be taken 100% seriously, or even
Yeah.
much smaller percent seriously.
Hey,
Yeah.
LasagnaCat, did you notice that the way that I described it, how the moving averages kind of flatten out, did that kind of help you?
Let's see. Yeah, so I was checking out the 21 right here. Um and what do you call it? And I forget how you word it. Do you say that the price action like sort of pulls and moves the moving averages different ways?
Mm-hmm.
Yeah. And so I noticed that right here. And I noticed that it was getting a little bit more mellow um on the 50 EMA. Like this type of down back
Yeah.
here is different from this type of down.
Mm-hmm.
Still pointing down, but you can see it mellowing, which is something
And
that
where's your 50 SMA? Or
SMA's up here. It's,
yeah.
that guy right
But
there.
remember, when it's underneath all the moving averages,
Hmm.
it's first going to do the fastest moving average, and then
Right.
the second fastest moving average, and then the third fastest moving average. So what's this? That's a Bollinger Band, huh?
Let's see right here. That is going to be my 9 EMA. That's the 10 SMA.
Yeah,
This is my lower Bollinger Band right there.
yeah.
A lot of lines going on.
So start paying attention to the moving averages flattening out. See, so the 9 EMA flattened out right here.
Mhm.
The 10 SMA flattened out right here. And then your 21 flattened out right there.
Yeah.
And then the next one's gonna flatten out a little bit later.
And
And
that
then
didn't
the
occur to
next
me
one.
to like watch the really quick ones for flattening.
See?
But yeah, 100.
The remember when we first started, I always used to use the 921 cross.
Yeah.
That was like my first, okay, be on the lookout for a possible move.
Yeah.
And then getting the 50-50 cross is okay. That's a confirmation for the move.
Right.
But now we have RSI and MACD to help us
Yeah.
clarify that. But you can use the 921 cross or the 50-50 cross or the
Yeah.
10. There's a bunch of crosses, and I don't want to confuse new members, but there are a bunch of crosses that could potentially help you. And if those, that's just something that helps me um, identify the moving averages a little bit better, or
Yeah.
at least the move in between the moving averages. Um, So yeah, if you guys have any questions on moving averages or fib setups, reach out to me or Lasagna Cat, Whiplash or Susan. Uh, some of the members have been around for a while.
Um, and we got a question from Easy. How many moving averages are you running? And do you have them all on all time frames? I don't have all of them on all time frames. I'll run you through what I got on the 1 minute. The 1 minute has the most because that's where I watch more crossovers. What I mean is like, so I have the 200 SMA, I have the 100 EMA, I have the 50 SMA, and I have the 21 EMA. But for the 200, I have the SMA and the EMA. And for the 50, I have the SMA and the EMA. Because Semper showed me that like it's good to watch crosses of the two different moving averages for both of those times. So for the 200 and the 50, I'm running EMA and SMA. And again, the 21 down here, EMA, not both. 10 SMA, not both. 9 EMA, not both. It's a lot of lines. I probably don't ultimately need the 9 and the 10.
I would keep the 10 SMA just
Right.
because we use the 10 SMA, the 50 SMA, 100 EMA, 50 EMA, 200,
Yeah.
and the 666.
Yeah.
That's what I would recommend. Easy is introduce them slowly, one at a time, um, just so you get the moves. But the majority, the big ones that I use is the 666 SMA, 200 SMA. On one chart, I'll have the 200 EMA and the 200, but that's just like passively looking at it. 100 EMA, 50 SMA, 50 EMA, and the 10 SMA. And I have all those on all the time frames. The only reason why I say that is because the longer time frame, say the moving average busts through the 200 and the 200 spread apart from the 666 1 minute, and you don't know or you can't tell, okay, where might there be a bounce or where is it going to bounce? So that's when you go into the 5 minute time frame to see if there's a moving average below where price action currently is on the 1 minute. And then if it reaches that level, then you know there might be a bounce there on that on the 5 minute same moving average. And then if it busts through that level, then it might go to the 30-minute moving average level. So that's why it's kind of good to have them on all. But we've slowly introduced this many moving averages. I believe in the first couple lessons we only had the 9 EMA, 50 SMA, 200, and the 100. Those are the four moving averages we started out with, and I've slowly added more. When Connor added, or when Brandon had a lesson on the 9 and the 21 moving average cross. I think after that lesson, I took it a little bit too far, but it helps me. So do whatever helps you. Don't, if you put up the line and you're like, nah, it's just more confusing, then take it off. You don't want to get confused. You want to add stuff that's going to help you identify price action.
Hey, Semper,
What's up?
this is Kyle, I got a question. I think I maybe messaged you about this, but I think I was also messaging you a couple other things. But how do you make of the like when price action shoots right through all the moving averages with no back test, like all the way to the 200? Doesn't back test anything, it just like cuts right through them all.
It depends on the placement of the moving averages. To me, that would seem closer to either a scam up or when the moving averages are tight together. Is that what you're seeing, or
Yeah, like
is that when
well,
you're talking about smashing through?
even so in this like in Lasagna Cats screen here. That's all I'm seeing, by the way. I don't know if you're showing another screen, but
No,
if
it's Lasagna
like
Cats.
after it makes it up, looks like I'm assuming that's his 21. Is that his yellow?
Yeah, it's 21.
And then
Yeah,
it
right
comes
here.
back down, and then the next move is basically just like shoots straight up to the 200. It doesn't. It's not like it tests the 50 and then comes back and then tests the 100. And I know it's not always going to be perfect. I just didn't know if that was ever indicating anything to you or kind of had any sort of like rhyme or reason for times when it would do that.
For me, when it smashes through like that, it would indicate that it's gonna go to the 666. Whether it's gonna do it on this move, um, that's up in the air, right? But eventually, I bet it did hit the 666 before it's smashing through. Um,
Okay.
because the way that I look at it, if it smashes through that level, I want to see it come back and test that level before it goes back up. And if you don't see that, then don't get in. Like,
Okay.
remember, I've walked you guys through where it tests the 21. What's the next level? The 50. So it's going to hit the 50 right here. And it had a little pullback. It didn't really test, kind of tested the 21. And that's what it usually does. So it'll get between, it'll get stuck between two moving averages. So what moving averages do you want it to get stuck through? Um, is this the 200 right here? Oh no, this is the 200, huh?
Yeah, it's a 200 SMA.
Yeah, so once it gets, and this white dotted line is your 100 EMA?
White dotted is VWAP.
You're right. Uh, this is a 100 EMA, huh?
Yeah, little guy. Yep.
So in between the 200, if it smashed through it, you want it to back test the 100. Right here, it failed. Um, but that's what you want to see. But these candles probably signify that, because the way that I see it is it has to pull up these moving averages up because the 200 is a little bit far from the 666 over here. So it has to pull all these moving averages up, and you'll see them swoop. You'll see them swoop like that. All the moving averages. The fastest one will start to flatten out first. So you'll see it flat right here, start flat here, start flat here, and then it has to pull them up. The faster the moving average, the faster it'll move up. Um, so um, what moving averages do you have right here?
So the dotted one is the 50 EMA. The one right below it that's kind of hard to see, not the white one, but the one
This
below
one?
it that's kind of pink, that's the 50 SMA. So those are both 50s.
Yeah.
And then this one down here, the yellow, that's 21.
Yeah, once you see price action and it's pulling up the moving averages, you don't want them losing those moving averages because then it might go back the other way. Because it looks like, what's this? 100?
This right here? Yeah, 100.
Yeah, it looked like that was resistance. And then right here, you start to see it perfect because there's a 50 right here.
Yeah.
So if it smashes through the level, it's going to reset, complete the cycle to keep pushing the moving averages up. So it reset over here. You can see it. And something that'll help you with that is like I told LasagnaCat, I don't know if it's the best way to describe it, but the RSI calibrates to the moving average. I believe Connor was talking about that um, that price action calibrates to the moving average, and it's our, it's kind of our job to figure out what price action is calibrated to, or gonna go to. Well, RSI kind of helps you with that because, like right here where it tags a 21, the RSI is calibrated to the 21 because it topped out right there. So the next thing you want to see is it bounce off the 9 or the 10 EMA or not lose that level. And then bounce back through the 21, which it did right here. And then the next level it calibrates to is the 50 SMA. because it tops out right there. So now the RSI is in sequence with the 50 SMA. Yeah, that's weird. And that's the way you use it. This is probably not the best example because the lines are all jumbled, but use if the RSI rejects at a certain moving average, that's moving average it's calibrated to. So then what do you want to see is you want to see a higher low, either a higher low anywhere in this zone right here. You want to see 50% of that and then go back up to the next moving average if you're using moving averages. Hopefully that answers your question.
All right. Yeah, so that's that one. And I forgot to mention that up here, I got the 666. So yeah, I definitely use the 666. It's been coming in real handy lately. On larger time frames, I only use the 666, 200 SMA, 100 EMA, I think 50 and 10. I don't know. I'm a little bit lazy about my larger time frames. I'm starting to really get like more steady looking at those because like Semper was saying, like when it fails a moving average on like the 1 minute, you start looking at the 5, and then if it fails that, look at the 30. That's been coming really handy for me lately. All right, so that was Tuesday, and moving into 17th, the 17th, Wednesday. So I got another green trade, took one trade that day, worked out well. So what we see here, very similar, got my dump down. That's when I know to start looking for stuff. A little bit of price action here, that was looking a little tricky. Wasn't interested in it ultimately. Although it did look tempting, I'm not gonna say it didn't. But it might have had to do with what SPY was doing at the time. I didn't see really good support there, is probably what it amounted to. But on this next little leg down, it hit again, standard dev -1. Really good on futures. Probably something on SPY. I didn't take a screenshot for SPY. But we had nice higher lows on RSI, which I use this little trend line to illustrate. Nice higher lows and a nice recovery of overcool. It's funny, I got into this move real quick because I saw this little red pullback and I was like, I don't think that's the one, but I would love to see it create a higher low, and it did right here. So I was like, cool, higher low. I also did notice the accumulation of these green crossover arrows, so I didn't ignore that. I did not ignore that. So I didn't do this red pullback. This one, so this candle started green, came up like this, and I initially did have my fib drawn there just to sort of have the fib on the screen and move it around as price action increased. It's a good practice to be in, I think. So when this one passed this one, I moved my fib up to here and started rejecting. And then when it started turning red, I was like, look, if that comes down to my ad zone, that's probably my second pullback. Higher low, that is. Higher low 1, higher low 2. So when I saw it do like the tiniest dance within the ad zone there, and I saw RSI and I saw MACD. Let me show you MACD. It's on a different screenshot. Whoa, full screen. That's what MACD looked like at the time. Nice fresh crossover. Nice fresh cross. Let me get that out of there. Anyway, back to the trade. So MACD and RSI both look good. So yeah, it looked good. That was my second higher low. I got right in, no hesitation. Thought it looked good. I was liking the volume too. There was this big red one, but I just kind of felt like it was, I don't know, resetting volume, so to speak. So I got in, and after that, it was, just the easiest thing in the world to sit and watch it. Boom. So, moving averages. I didn't have a very clear moving average stack. 666 was down here, 200 was up there. But, you know, the 100 was crossing under the 200. The 50 was pointing down pretty, you know, with a lot of intent. But what got me interested was the flatness of the 666, the yellow, and the flatness of the 200 SMA. Both were flat. And I don't know, like we've mentioned the flattening out of moving averages as something to look for. In a sense, it wasn't entirely conclusive to me, but since I figured the slower flat moving average, because these are both major moving averages, 666, 200, those are like the major ones. So I figured since the slower one was under the faster one and they were both flat, I took that as a bullish catalyst. I sort of went freestyle there, but I was piecing together different moving average things that Semper had told me about. And 161 fib lined up with VWAP. I knew that's where I was getting out, and I got out. And that was a really nice add zone to 161 target. Again, if I was holding some contracts, my 161 fib was up here, lined up with this daily, moving average. So, you know, I like to think I would have gotten out a little beforehand. Maybe not. Doesn't matter because this is the trade right here, up to 161 fib. That's all the details about that one. I feel it was like a good example of my setup working out, and I don't know, like a good example of like this one working out and this one not working out. If you remember the red trades I had on Monday, the price action was kind of similar to this. It was sort of very contained. It was kind of like blocky and tight, which who knows, maybe under certain conditions could be good. But we needed the firm support, and this price action looks like it's breathing a bit more, you know. And that's that. If anyone has any comments, that's awesome. Also, Semper, I was wondering what you thought of my moving average read with the two major ones being flat as well as stacked in that right direction.
Yeah, that's what you want to see. You don't want to see them either pointing down. It wouldn't be pointed up because trend is not up, and it's coming from down here.
Yeah.
But usually you want to see the lines. They'll be like this, right? They'll be like pointing down, both of them.
Mm-hmm.
And then you'll see it flattened out like that. And then this one will come in and it'll start to cross up above it. But it'll be flat for a while. And that's where we were right here. See? That's
Yeah.
where we were right here. But keep in mind, if they were reversed, it'd probably still be short. You know what I'm saying? If the 200 was up here, or what two
Right.
moving averages?
Yeah.
Just like on Monday where you got burned, if the 200 is up top and it's pointing down,
Yeah.
you don't want to get in. But if it's still above it, like today, you're like, oh, well, today it looks kind of bullish because the 200 was up here and the 666 was flat.
Yeah.
I don't know. Do you want to go over what? I think you did a great job. Do you want to go over what we discussed this morning about the 50-50 cross and how you kind of read the price action?
Yeah, absolutely. Absolutely. Because that led to the setup to a green trade. I'll show you what. Hello. Get rid of these. I'll show you y'all what Semper is referring to. This brings us to Friday. And actually on Thursday, yesterday, I didn't place a trade. I was watching the market, saw some interesting stuff, but didn't push the button on anything. But this is from this morning. And this was a good trade, and it was fun to watch moving averages. So at around this time, right around this area, if I remember correctly, Semper hit me up on the messenger and he said, all right, so what are you looking at? What are you seeing? What are you thinking? And so my response was, well, all the moving averages, major ones, are stacked bullishly. We got the 666, got the 200, got the 100, we got the 50, all stacked bullish. So I was like, cool, that sounds great. And I was like, but the 50 EMA is crossed under the 50 SMA, which I think looks a bit suspicious. And the 50 SMA, can't really see it from the little jumble here, but the 50 SMA was pointing down in a downward direction, as well as having the 50-50 cross to the downside. So I was like, what I'd love to see would be a pullback to the 666. The thing that made me venture that, desire or hopefulness to see was that activity with the 50 moving averages. So I was like, I'd love to see a dump down to 666. It seems like a long way away, but I don't know, that's what I want to see. And I felt that with the bullish outlook of the stack, as well as the 50-50 cross the downside, I thought might be possible. And you can't really see it from this slide, but you see where the MACD down here starts oscillating red. The first one of those is very small, but I saw it begin to form, and I saw the MACD starting to cross, and I was like, oh shit, that's really could be the confirmations to the downside. And I noticed that on this candle, and as soon as I noticed it, it started or it was one of these candles. And as soon as I noticed it started moving down, like like down. And I was like, oh shit. And then I looked away for a second and started doing so much speed. And I was like, oh shit, we're about to get to 666, aren't we? Just, what the doctor ordered. It smashed below the 666. At that point, I was like, oh shit, where's it going? But then when it pushed back up, I was like, I feel I know exactly where it's going. I don't, but I've got a good idea what I want to see. And so at that point, I was like, let me get my red pullback. Let me get my first red pullback. 200 was right here. I was like, come on, we get it. So when this one rejected, stayed green, but rejected, I was like, all right, what's this next one going to be? Started green, started being red. So I drew my fib from there all the way down. It also would have been legit to draw it from this green one up here, I feel, because I had interactions with two moving averages. But I did the red one, which is textbook. And then RSI recovered over cool down here. MACD going in for the cross over here. Volume, I wasn't really getting anything conclusive from, but I wasn't really paying attention because the moving average looked really strong, as well as these indicators down here. So when it pulled it back down here, I was like, this is my ad zone. My ad zone is positioned right in the neighborhood of 666. I was like, I'm in. Again, this is a first red pullback move, not usually what I look for. Wait, sorry, first higher low move. I usually like to see two, but with that combination of catalysts, as well as the fact that it followed like sort of what I was putting together about moving average activity, and the fact that that was working out. And also the fact that over here to the left, you could see like buyer activity. Semper always likes to point out that when you see these gray dojis right here, like these perfect guys, that those can be over under levels. They happen more on MES. He pointed out, I'm trading MES, and I'll be trading MES for a while, so good thing. And so, yeah, it popped all the way the hell up. I was like, oh shit, hit the 50 like butter. Just shy of the 50 actually. But my target was up here. I wanted my 161 target, and not out of stubbornness, but I was like, look, got up here real easy. Let's see if we can get support on here. 100 was also lined up pretty well. 200 SMA, and these sellers are stepping out of the way. All the good stuff. RSI found the 50. So yep, caught support, shot up here very enthusiastically. I got out a little bit under my target, which is what I like to do. And that was it. Really happy with that trade. Really happy with that trade because of all the moving average stuff I put together through, just like the last week or 10 days, of, Semper, like, driving home the different points to me about looking at different moving average relationships and behaviors. So excellent trade. I'm really happy with this one. Great way to end the week. I saw some other stuff that looked good later on in the day. And I was like, nah, let me just sit back, and really digest these lessons and the satisfaction of using them properly or appropriately. And that was that.
Nice. You notice right here how they kind of line up with your moving averages? See right here? Oh, yeah, right here. Where you entered and then it right here.
Yeah.
And what's this one right here?
So we got that one up there is the 50 SMA.
Yeah.
And then the one below it, this is the 21 joining up with the 200 EMA.
Hmm.
And these tags are the 200 SMA.
Yeah. Yeah, like I had taken this trade myself too, but I had a fishing order at the 666. Um, I'm using a 4 point stop loss, so it did smash through, but I was getting kind of nervous, but as soon as I started seeing the Bollinger Band kind of flatten out,
Yeah.
it was good. I seen RSI overcool and MACD was closing in on the average,
Yeah. Yeah.
so that's why I stayed in. But yeah, I had a fishing order out. I thought it was gonna honestly rip and then dump for Powell.
Yeah.
Um, but because usually it does the inverse, it because the market kind of tells you what's gonna happen before the move happens. So if they run it up right before Powell, then they might push it down for Powell, so like that it doesn't drop as much. And if they do the inverse, if they run it down right before Powell, then they're probably gonna pop it up um, for Powell. And that same scenario plays out time and time again for power hour. Same thing happens. If it runs up, if it runs up all morning and then it pulls back like 50%, like around between 8 and 10 a.m. Pacific Standard Time, it'll start to set up for a long during power hour. And the same goes for if it's going short in the morning and then it pops up. Um, and those are the characteristics that you kind of have to look for when you're seeing the price action of SPY and ES. See how it runs up or see how it pushes down right before power hour and see if it starts to set up. Same thing goes for after hours. These are not necessarily plays, Lasagna Cat, but
Mhm.
it's good to get in know the characteristics.
Yeah.
Price action, just like when another another play that we can add for you and it complements everything is the HCR play in the after hours.
Yeah.
So remember, if price action opens up inside the previous day close, whether it's on the top or the bottom, has a high likelihood of it to pull down to half candle retrace.
Hmm.
And in that, you can either use your fibs to see if it's actually going to set up for a retrace to the HCR, or you can use your moving averages.
Yeah. On that note, I didn't have time to share it last week, or it might have been the week before, but I did have an opportunity to trade after hours, and I caught one of those HCR plays, 10 points,
No,
you know.
feedback. Um, yeah, definitely. Like, and now that you have those two plays down, the moving
Yeah.
average and the fibs, now we're gonna throw other plays on there. But like I said, it complements each other. You know what I'm saying? The ACR play. Okay,
Yeah.
how do you know it's the ACR play? One criteria has to open up or come, even if it doesn't open up inside previous day close, if it opens up above it and then if it gaps up and then it comes back down, then it's gonna have strength to continue going down.
Yeah.
Um, or gaps down, same thing. So either inside the previous day close and then your normal moving average criteria or fib criteria, whatever you
Yeah.
use. Um, so yeah, and then you'll start to know how price action moves after hours, and then you'll start to know how price action moves during pre-market. We've started to learn that 5:30 or 8:30 Eastern price action is pretty good right before it or right after it. And then it moves differently at open. And then again, it moves differently for power hour. Those are the time frames that you should learn how price action moves. It sucks because after hours it's a little bit slower, but now you're kind of blocking off the day. You know what I'm saying?
Yeah.
So if you know it's going to start short, then okay, it might set up for a later time in the day. Especially if you work, these are great times to know how price action is moving in those blocks. So like that, okay, it's moving pretty. If you look at your phone, be like, okay, I need to go back to my computer, or it's setting up for power hour. Okay, if I miss power hour, then let's see what the setup is for after hours. And you want to have those setups because it's way better to build up the cushion, and it's a lot easier to read price action after hours than it is live. And you can build up that cushion. You can build up that cushion so like that the first either at 5:30 Pacific Standard Time or at open, you can take a little bit of riskier play if you want to. But yeah.
I don't have much time usually to trade after hours because I work till like 11 or 11:30 p.m. on most nights. But what I did decide to do was to before I passed out after work last night, I when I got home, I just sat in front of the futures for an hour and just watched moving averages. It moves real slow, but like, I had another video on at the same time and like I was watching them and you still get an opportunity to watch them, watch their behavior, say out loud what you'd like to see. So I'm going to keep up that practice. And there are going to be like a couple nights a week that I can actually hopefully trade some
Yeah.
futures.
Yeah,
And
definitely, because you start to learn the behaviors, and then you can just roll it into open, roll it into power hour. Okay,
yeah,
I know the flow. You got to get in the flow. Uh, but once you know that, you'll be good.
yeah.
In those two setups, the fib and the moving averages, you should be able to trade two to three, 2 to 4 times a day.
Yeah, absolutely. And I'm down to look at another setup too. When the time is right.
Yeah,
Um and just like this week was a huge success, I need to say, because like the moving average lessons really clicked into place and really integrate well with the setups, so
yeah,
cool.
glad to hear. So, like I said, just write down, or just even like, hey, this happened after hours, or it opened up in. You don't even have to just sit there after hours. Just say, okay, it opened up inside yesterday's. What did it do? Did it go down at ACR? Did the moving and write down where the placement of the moving averages are, because if it doesn't reach ACR and you look at the moving averages, then you'll be like, oh, okay, the moving
Mhm.
averages told me why it didn't reach
Okay,
HCR. And that goes for anything.
cool.
So cool. Does anybody have any questions, any issues they want to work on? You can post them in the chat, in the futures chat, um, post them in the Zoom chat, or just unmute yourself. Easy. We missed it. Did we miss it? Easy said we're about to have a big buy signal on the 5 minute. That was a long time ago. You probably missed it. Oh, my bells are going off. So now the moving averages are stacked how we want them, and we're getting the 50-50 cross. We need RSI to hold. Um, We need RSI to hold the 50 RSI right here. TTM not looking too hot. The volume not looking too hot. But in the last few minutes, it'll freaking shoot up or shoot down. And it hasn't tagged the 666 in a long time. So Kyle, are you still here?
Yeah, I'm here. I gotta go in like 2 minutes though.
Yeah, no worries. Is this what kind of you were talking about? Where kind of price action smashes through all the moving averages right here?
Yeah. Well, I mean, I guess that was a little different because that was during Powell, but yeah. Um,
Or do they look different to you?
the same thing here. It's like it's weird, and I'm not saying that I have like a great gut algo, but it seems like everything's showing higher low
Yeah,
on the RSI and MACD.
yeah,
It's like it wants to tag that 666, but it just seems like there's been some pretty big like bullish MACD crosses and like the price action really didn't do anything.
yeah. In this
Oh,
case, because the 200, you see how the 200 is kind of pointing down,
yeah,
and this one's kind of pointing up.
yeah.
So what to me, price action is
What's the
doing
blue?
the 666 is the blue.
Oh, okay.
So to me, it needs to pull up the 666, right? And it needs to pull down the 200. So what I want to see is price action hit its head either on the 200, worst case scenario, the VWAP up here, and I want overheat over here because it's kind of like sandwiching both lines together, right?
Yeah,
So it has to pull up the 666, which it was doing with these little pops right here, but at the same time it was pulling down the 200 with these
okay.
drops. So it's sandwiching the moving averages. So yeah, the 50-50 cross right here is telling you that it's gonna pop. Um, I'm thinking to the 200. Will it get there by 2 o'clock? Maybe, maybe not. But that's what I'm seeing right now. And then the 666 and the 200 are going to be closer together, right? They're going to be tighter together, so it's going to make it easier for the 200 to bust through. Just because we have the 50 EMA or the 50 SMA, we have the death cross right here. So
Yep.
you have that. So we have that. But now we want to see it since the 200 is pointing down to the 666. We want to wait. I mean,
So at
if you
what
got in here at the 50, you could have got into the pop of the 200, which is still 10 points, if you would have got
so
in
at
right
what
here.
point during this simper, this is mainly a question for me. Maybe everyone else would be wondering this the same way, but like say you're starting to get a pretty good read. Like obviously it helps that you kind of had the same read that I was thinking, but
Hmm.
now when do you get into this move? Like when are you looking for a move here? I mean, obviously you're not going to just jump right in and say, okay, I'm going to play this to the 200 now, but do you just wait until it hits the 200 and then see what your price action is from there? Like you said, you want it to be overheated at the 200.
Yeah, yeah, exactly. 200. But right here, LasagnaCat said that dojis play a big part in
Hmm.
futures. So right here, obviously, we had a big pop, so we know buyers are right here because we have another big pop right there. Um, so the way that I like to draw my zones are from the body to the wick. I usually do it from here, so I'll draw that zone.
Okay.
I start seeing higher lows right here. So if I miss it right here, I'm starting to see the 50-50 cross. Okay, what do I see? Okay, I see a bullish pop, but where's it gonna pop to? And that's where you got to see where is it, calibrated to. Depending on the speed of the RSI right here, sometimes it'll calibrate to the 100. Well, then if it resists at the 100, then you know the RSI is calibrated to the 100. But right now, since it's going really slow and it has a lot of space up, and the 100 right here, this one's the 100.
Mm-hmm.
To me, I'm expecting it to be like, I think the RSI is gonna max out at the 200 or overheat, just because of
Yeah.
the space from here to here, and look at from here to here. So I'm already at this point right here. I'm already thinking, okay, the buyers are right there. If I miss this play or if I miss this entry down here, what do I see that could possibly be an entry? Is these little hammer dojis right here.
Mm-hmm.
I would put a level right there. I would put a level. You can even do this little doji. I like to see them kind of like this instead
Mm-hmm.
of with the body. But I would say, okay, anything after that, if that holds, because it lines up with the 50 moving average, if that holds and the RSI holds right here, you see it right here, down here on
Yeah.
the bottom, I'll get in. But I'm also gonna measure, I would measure from the 50 to the 100 to see if it's even worth it. Because if it rejects at the 100, you might want to have your finger on the trigger. If it busts through the 100, okay, you got room to the 200, so it's gonna go. So is
So
it
even
worth it?
like in this particular trade, if this thing broke through the 100, would you take that trade to the 200?
No, it's too high for me. I know it's what, 10 points,
Yeah.
6 points, 6 points. Just because the RSI is not closer to the 50, it's in the middle. When it's in the middle, it's just like anything, it can go up or down.
Okay.
Uh, but definitely that's the way that I would look at the price action.
So if you got this thing coming back, like if for whatever reason it pulled back here, got RSI to the 50 and then stopped at like that level that you drew and
Hmm.
started to make its way back up, that would be a good entry point and an exit
Yeah,
point.
yeah. Because
Okay.
because right now, if it smashes through the 100, it might not hit the 200 that leg. It's gonna pull back to the 100 EMA. Worst case, this level, and then go back, tag the 200 because it still has to pull up the 666 a little bit more, and then it's gonna dump the 200 so it can cross the 200. Because
Yeah.
all the other moving averages are gonna be down. They're already gonna be down here,
Yeah.
while the
And I
200 is
was
still over here.
and I was seeing that the SPY, the 10, we got the 1050 cross. Now on mine, I have after hours on and
Hmm.
O'Connor doesn't.
Yeah.
But it looks like it wants to back test. It hasn't back tested the 50 SMA on the 30-minute, and which would probably line up because it's about 70 points away, 70, 70 cents away on the SPY from the
Hmm.
50 SMA.
Yeah.
So that would net you what, 7 points?
Yeah.
So it sort of like makes sense that it may do that.
Yeah. So, and same here. See the 50-50 cross on the 30, and like I said, use the other levels to give you levels. Like when it busted through the, I was chatting with LasagnaCat. When it busted through this level, what level is it gonna go to? The 100. So I got in on this candle and I caught the pop
Okay. Yeah.
because I'm already expecting that, and that's why the longer time frames work, because the moving averages are stacked right now, right? They were stacked right here perfectly how we like to see them in order.
Hmm.
Even though the 666 and the 200 are kind of overlap the whole freaking time, but you see them overlap right here. They're all lined up in order, and then you start to see it just start doing the. It's like, remember when Brandon says it resets? It's kind of resetting now. So I already had
Okay.
to move up. Now it's going to reset. And then since it hasn't tagged the 666 for confirmation, because once it busts through that level, it has to come back and tag it. When it comes back down and tags it down here, that's where you got to wait and see, okay, is it going to smash through? What does RSI look? If it comes down here and RSI is down in the overcool zone, then there is going to be a good bounce. But you also got to check the MACD.
Yeah, so it just sold off, came back, RSI came back to the 50. But also MACD looks pretty bearish too, unless it's gonna be like a fake cross.
Yeah.
So at this point you're just sort of just
You're just
when it
waiting.
happens that fast, you're like,
Yeah. Your best entry would have been right here, but like I said, from the 50 to the 100, you got to measure that. Is it worth it? And you got to have your finger on the trigger at the 100 because it
Mhm.
might do that. Optimal entry for this play would have been down here. Just because even right here would have been good. Because you're getting higher lows and you got higher lows down here. And that's another thing. That's another thing. If you guys see how kind of base is right here? This is the base, right? Because it based down here. And then you guys start seeing RSI create higher lows. Be on the lookout for the move up.
Yeah.
But like I said, take it in ranges. Take it to the RSI resistance 50. Okay, there's resistance 50. So the next resistance is up here because it's on the top. So the next resistance is the 70. And then, yeah.
Thanks, Simper. I gotta
No
go.
problem. Yeah, no
Good
worries,
stuff.
man. Thanks for stopping by.
Yeah,
Thanks
of
everybody
course.
for stopping by. We'll be here next week. Continue on with LasagnaCats journey here soon. I believe in the beginning of July, we're gonna do the small account challenge with LasagnaCat trading live with this new setups, and yeah, see where we go from there. So thanks everybody. Have a good one.